Hey folks, Dan Frio here with your opening bell for April 25th, 2025. So I decided to do this live today as long as all this stuff cooperates with me this morning. I think we're going to have a pretty darn good show for you today. So without further ado, let's get to what we've seen this week. I want to show you the economic calendar for next week because it's filling in every gap, basically every gap that the Federal Reserve monitors. It's going to give us the PCE, the actual inflation number that the Federal Reserve really wants to see. It's going to give us the unemployment rate and also going to give us the GDP. So all these numbers are going to be filled in next week from the Federal Reserve. That, along with tariffs and China and Russia and everything else, we're going to see kind of how all this transpires through the week. So without further ado, let's get over to where rates are today, where they're going, and my expectations over maybe the next short, midterm, and long-term sphere that we have. So what we're going to talk about in today's video, it's going to be an action-packed thing. I hope you'll learn a lot today. We're going to talk stocks, what my expectations are in there, and don't trade on what I do and what I say. I'm a mortgage guy. I'm not licensed for stocks, bonds, equities, anything like that. Just use this for entertainment and educational purposes. Please don't trade on what I'm telling you. A lot of times I'll tell you what I'm doing behind the scenes, but that's what we're looking at. So we're going to look at some stocks, where I expect them to go possibly. We're going to look at earnings that came in this week. Google just came out and their numbers just blew out the doors. So we're going to talk about that briefly. So we're going to go through here. The stock market it's taken a hit, but just blink and this might be up 1,000 points, in an hour or two. I don't know about you guys, but I have really bad anxiety. And this market is killing me right now. So I just want to let you know also that had a little bit of a tough week. We had to take my mom out of extended care. We didn't know if we needed to put her into a nursing home or if we could bring her back home and get some help there. And fortunately, I didn't have to put her into a nursing home. So I got a lot of family support with that. So your prayers are welcome when it comes to that stuff with me. So thanks. I'm just like you guys, folks. I have issues in the background, but my goal is to help you guys navigate through this stuff. So here's what we're going to talk about today. And if you have questions, please post them. I'll try to get to them. I don't care if it's really in regards to stocks, bonds, cryptocurrencies, but we focus in on real estate. So let's get over to what we're looking in there so far. I got to refresh the screen. A lot of times there's a lot of action through here, so I get kicked out. But right now, here's what we're seeing in the markets. There really wasn't much economic news out this morning. We go through here, consumer sentiment. It's down, not as much as expected, but it's down, and I could have told you that. They didn't have to do a report on that. But you're here to see what's going on with mortgage rates and the bond market there. So here's what we're seeing right through here in the bond market, which you have to understand if you're new to the channel. This bond market that you're seeing right through here, all you have to understand is through here, this is the mortgage bond. So if you want to figure out what's going on with mortgage rates, you don't watch the 10-year Treasury, you don't watch anything else, you just watch this bond. As the price goes up, rates come down. Look at let's go 2 days. Again, this is fantastic. As the price goes up, rates are coming down. Look at that. These orange bubbles, these are investors we use, and it tells me if they're cutting rates or what they're doing behind the scenes. So if I start seeing one pop and then another one pop, I pretty much am assured that most lenders are going to reprice at that time. That's how I give you guys some forewarnings. Now, I just added myself to X and Truth Media and Instagram and things like that. What I'm trying to do is, I know I might be bombarding you guys with a lot of videos right now. I'm testing out a lot of these systems, but I will be posting on a lot of these instant websites if I'm looking to float or lock. And I'll say emergency lock. So if you're even a mortgage person out there watching me, I'll try to start, cooperating a little bit more on that social media, the instant platforms, just to give you guys some advice on what's going on and what my thoughts are behind the scenes. So here's what we're looking at right now, the Federal Reserve. Here's what they monitor. Here's what they're looking at to figure out what they're going to do. Okay, so we know at the next meeting, if you go over to this, the CME FedWatch tool, this is telling us what the Federal Reserve's expected to do at the next meeting. They're going to meet in 12 days. That's coming up pretty quick. But if you go down through here, here's what we're seeing. This is the expectations of what they're going to do. So what you have to understand right through here, let's get over to, oh shoot, I'm all over the board right now. Right through here, this is what they're looking at. So the Federal Reserve controls what's called the federal funds rate. And you're seeing that right through here. So what we do is we go over to the CME FedWatch tool to see what's the projections of, are they going to cut? Are they going to increase rates? What are they going to do? So this line through here tells us the meeting date. Okay, so the next meeting is 5/7. That, again, is in 12 days. You go over to here, and there's a 93.2% chance right through there that they're going to have rates, or the federal funds rate, at 4.25 to 4.5. So if we go back to this, well, it's already there. So that means they're not going to do anything. Okay, so now let's fill in the bubbles here. So if we're just focusing on what the Federal Reserve is going to do, let's kind of look at each one of these components and then kind of predict what they possibly could do, or what they might, I'll say, should do. However, the tariffs are throwing a huge monkey wrench into this. So I'll give you my context of, everybody says I'm completely pro-Trump. Well, I'm going to give him a downgrade on this one. Here's what I'm going back to the Federal Reserve. I think the rate's too high. I truly do. But if I'm in their shoes, I'm going to sit here and say, okay, President Trump, you're throwing out these tariffs, and China went from 25% to 50% to 125% to 240%. Now it's down to 50%. What's it going to be? They're our biggest trading partner out there. Now, I know you're meeting with 75 or 100 of the other countries, and you're going to make settlements, but what are they? Are they going to be inflationary? And that's what all corporations are concerned about right now. So when we look at companies, we're going to look at some of the data that's come out, their corporate earnings and their forecasts, but a lot of this is still uncertain. Where are tariffs going to take us? Okay, so here's what my perspective would be. If I'm sitting on the Federal Reserve, I'm going to say, okay, we're going to see how these numbers come out, because here's the data that's coming out next week, and kind of let's take a little bit of a brief look at them. So if we go to the economic calendar, this is next week. There's really nothing on the economic calendar today. That's what I just showed you right through here. There's really nothing here that should make the markets really move, other than consumer sentiments down. But if we go over to the economic calendar, here's what we get. We get Monday, nothing. We get on Tuesday, consumer confidence. And then we get the JOLT index. What the JOLT index is how many job openings and labor transfers there are. That gives us kind of an idea how transient the market is right now. Then we go over to Wednesday. Okay, and again, let's just go real quick over to the Federal Reserve. Inflation, PCE. It doesn't say CPI or PPI or any other number. It just says PCE. Then you get an unemployment rate and GDP. Let's go to our calendar. So we have GDP coming out on Wednesday. Okay, that fills in one of the blanks. Then we go down through here, and what do we have? Initial jobless claims. We got that, and then the unemployment rate. So we have that coming in. Also, we have the PCE. So we have basically every component that the Federal Reserve really wants to see, and how, where is it going to come in at? So let's just take a brief look at where we were. They haven't given any forecasts. I thought they would give us some forecasts. These will come out on Monday, but I want to see where their forecasts are. So let's say GDP, it was 2.4. They're expecting it to drop all the way to 0.4. That's a massive drop. Okay, so we'll see how that comes in. The PCE through here, how's it going to come in? They expected it at 0.4 previously, coming in at 0.1. 0.1? That's hardly any inflation at all. So is this going to drive down inflation and all the numbers that are looked at? Well, there's a lot more to it. Then we're going to start looking at really the unemployment numbers and how the wage growth is going, because that's going to also fill in a lot of the gaps for us. Is the jobs market really starting to deteriorate right now, or is the job market holding steady? And we're also going to look at average wages. Are wages keeping up with the inflation, or are they deteriorating from there? The last reading on that, you can see wages, this is month over month, it was 0.3, but the wages, if you stayed on your job, your wages went up on average 4.2%. If you moved around, on average, you got a 6% raise in your income. So inflation, if we see inflation, even at the Federal Reserve's, they're at 4.2, but the inflation numbers are really about 3%. You're outpacing the inflation numbers. So that's good news. But still, the uncertainty through here, and you're going to see it every day, is just where the tariffs are going here. Tariffs, Trump says, something about the bond market. It's just the uncertainties in the market. So now let's get over to, you're going to see these headlines. Existing home sales drop sharply in March as economist uncertainty mounts. I did a video last night, and I tried some AI stuff. But here's what's going on. I said this 3 years ago when everybody else was out there saying the housing market's going to crash. Values are going to drop considerably down to worse than 2008. I got on everybody's crap list when I said housing prices aren't really going to move. You're going to see nobody moving. So unless we have the builders really picking up on the construction side, you're going to have everybody that refinanced at 2% and 3%, they're stuck. And then you had all that transition during the COVID where everybody was moving all over the place. I think people finally settled in. and they're good. They're probably going to be good to, most people are staying in their homes on average throughout history 5 to 7 years. So if you refinanced, in 2001, 2, or 3, maybe one or two, you got 5 years out. We're looking at 2027, when a lot of people are just probably going to get anxious, and those are just historic numbers, so we'll see how those all pan out. But yeah, housing sales are dismal. I can vouch for you. We're hardly getting any contracts in. We're getting a lot of refinances in because mortgage rates are coming down, and a lot of people closed, a year and a half ago at 8% rates. So those people are coming in, but I'm going to vouch for it. The housing sales are really down, and we're not even getting a lot of quotes in from people that are looking to build. So yeah, there's a lot of uncertainty out there right now, and I don't blame people. That's why I continue to do these videos on a day-to-day basis to help you guys stay informed. So that's what we're going to look at right through there. So yes, home sales are, I think, maybe the worst since they've been recording this, but the home prices are staying stagnant. And then you're going to hear a lot of things about, the inventory is skyrocketing. Well, we're only about maybe half of the way where we were in normal markets. So yeah, the inventory is really jacking up, but during COVID, there was no inventory. A house went on the market, you'd have 50, 60, 100 bidders. And then from there, okay, that's, it would go, and people would overprice on their homes. So that's what happened. And so I'm even surprised that we didn't have, that exuberance at that point. Even prices come down just a little bit from there because a lot of people were just overbuying on homes. So you see a lot of these videos. It's like, oh boy, I wish I would have never bought this house. A lot of people did some stupid things. They bought a house without an inspection. Some people bought a house without even seeing it or no appraisal. So what's it really worth? Then you get it appraised, and it's like, oh, my house, the value dropped $100,000. Well, maybe it didn't. Maybe you just overpaid by $100,000. So those are some things you want to think about. Okay, so let's get over to the economic calendar. Now, this is going to be interesting. Here's what we're going to look at. This is yesterday's earnings report, and I think we have 25% or more. There's a lot of earnings reports here, but I'm not going to go through all these with you. What I want to show you is, let's just scroll down through here, and let's see what is green and what is red. Okay, this is going to give us an indication of, are people actually hitting their earnings? Are they missing? How well are they doing? Well, you can see right through here, Google just hit. They came out with earnings yesterday or last night, and their earnings were surprised by 40%. So their stock's rallying right now. So let's just go down through these. I don't even know some of these names, but let's go. We'll stop at the reds just to give a red indication of what industry is maybe suffering a little bit in these terms. So you go down through here, the first one we see is Pepsi. Well, Pepsi, Coke, that's a little concerning, I guess, because when people start cutting down on snacks and soft drinks, that is an issue. Union Pacific, that's the rails, so that's not sure there. Bristol Myers, we all know Bristol Myers Squibb. It was up 20. We got Comcast up 10. Sorry, I'm looking the other way, folks, because my screens are backwards. You go down through. Okay, we got a 9. Digital Realty Trust. That's a realty company. That got dismal. That was hammered just the other day. Excel Energy, not sure. But if you go down through here, you got a +4, you got a +13. Look, you have a lot, well, maybe not down through there, but it looks like the majority of the earnings reports from yesterday were positive or in the green. Let's see what today is. Nothing reported yet today. So the point is, if you're looking at the earnings reports, if you really had a complete market that was in shambles, ready to just completely crash, you'd probably see more and more red up there. What's this 141? Vinsat Auto, don't even know what it is, so not sure. But there's, you also see surprises like First Cash Holdings, FTI, Boyd, whatever it is. So that's what we're seeing right through there. So let's go back through and see if we didn't hit on something. Like I said, the CME FedWatch tools telling us the Federal Reserve's not really going to do anything at the next meeting. I'm not even going to, look to what they're going to do in June. We're going to see a lot of numbers filling in the blanks for the Fed next week. So once the Fed's data gets filled in, now we have what the administration's going to do with tariffs and everything else. So that's what we're going to pay most focus on, but we will be reporting next week every day that these reports come out. I'll do a report, tell you exactly what happened. We'll show you instant market reactions, and I'm going to give you my feedback going into these things. Like if you're with us today, we're probably going to lock you in because I don't like going into weekends without all my clients being locked in. So that it is a kind of a coin flip right now on what to do. So that's one of the reasons I do what I do. And I'll give you all my information on who I am in a second. But just I want to give you one other caption. I created this website years ago because a lot of people just don't understand their credit reports, and so forth. So This does fill into a lot of the financials we're talking about. So if you don't really follow your credit scores and things like that, you might do it. You might not even realize that you might be doing it wrong. Okay, so you probably have, if you don't know, we're going to go into a little credit segment right now for those people, and then we're going to conclude. I'll give you my forecast, what I'm thinking of, over the next week or two, the next month or two, and then the long-term duration. But if you're out there and you're looking, you're trying to figure out what your credit looks like, how to monitor it, just go to creditscoresandmore.com. I created this thing, and there's a lot of tools here for you to use, but there is one site here that I'd like you to just introduce you to. If you're not using credit, here, I'll just pull it up right here. If you're not using Credit Karma, I'd highly suggest you do. Just go to the creditscoresandmore.com. You click it. It's a free system. Here, I'll give you some advice on this too. Don't sign up for any of the bells and whistles. The free system with this, I've been using it for years. I love it. They keep trying to sell you on different things. Don't do it. The cool thing about this is it does teach you a lot about credit. You probably have 36 credit scores if you didn't know that. If you want to really learn more and more about credit, click this video. This is another system I use, but this kind of tells you a lot of things behind the scenes that you can do to improve your credit scores and so forth. So let's get back to it. So here's where rates are going right now. Let's go to the MBS market. It is up 18 ticks. That means mortgage rates are going to tick down just a little bit more today. So I wouldn't be surprised if rates got into the 6.8s today, and we're going to be monitoring this for you guys. So if you're out there and you're a current homeowner, I got a tool for you to use. Okay, if you're a current home buyer, if you're looking to build, please reach out to your builder. That's probably your best financial options that you have. If you're actually building a house on your own land, and you get a construction loan, you're going to need at the end of that what's called an end loan. We do those. So if you're in a construction loan, you need to get out of it at the end, would love to help you. If you're looking to buy your first house, we have a ton of tools, and this is one of the things that I monitor for you guys every day. So we have a tool here, and I just want to explain to you who I am and what I do. So my name is Dan Frio. I actually do these videos. I do videos 2 times a day to inform you guys what's going on with rates, different programs. We talk about stocks, bonds, cryptocurrencies. I also pop up every once in a while and talk about stock talk. I just give you fundamentals on what's going on with stock market, how to invest, how I invest. We go over, what our holdings are, and it's pretty interesting. So check out Stock Talk with Dan Frio. But the thing that I do, or what I do, is I'm actually a federally licensed loan officer. So I work at a federal bank that gives me a federal license all over the country. So the cool thing is, and the reason why I joined this company is they're allowing me to help them grow. And here's what we're doing. We're actually setting up other banks in kind of our backyard to a point. We're having the ability to use them, their rates and their programs to offer you guys. So that's why my slogan here is one application, one credit pool. We're going to shop your loan over 30 different lenders, because by doing this, again, you're going to put in your application. I'm not just going to shop you with my rates and my programs. I have 33 other banks that I have access to. So I can offer you their programs, their rates, such as if you're an investor, you might need a DSCR loan. What about a reverse mortgage, an N loan for construction, a VA disability loan, a USDA loan, a first-time home buyer? We can offer you all those and more. Just go to therateupdate.com. You can put in your application right above here. You can schedule a consultation right through here. Our 800 number is right here, but we also have some cool data down through here. Here's that RateWatch thing. If you're a homeowner right now and you want me to track rates for you, because you're like, Dan, every time rates drop, I kind of, dilly-dally a little bit, then I put in my application. By the time I go in and really try to lock, I lose it. So can you help me navigate this? Well, yeah, just click this. What it's going to do is show you a little video, put in your information. I'll track that rate for you. I'm not selling the data or anything. It is me tracking your rates. If you're interested in any of these other products, this is more, this is just a few of the videos I have on my website. So if you're a first-time home buyer, check out this video. If you're a disabled vet, I'd love for you to check out our disabled veterans programs that we offer you. VA refinances, reverse mortgages, how to understand your credit, how I boosted my credit scores actually, and the FHA new requirements that are required. So you can learn a lot on our website. You can learn a whole bunch about your credit on creditscoresandmore.com. So let's get over to it. Here's my expectations. My expectations are China and the U.S. That's the biggest, basically, white elephant in the room. The Chinese aren't going to want to look like they're losing, nor is President Trump. So they will get something figured out. It's going to be choppy. The media is going to be all over this, because the media doesn't want to come back to you guys and say, okay, they worked out an agreement and everything's peachy. You won't watch. They're going to come in and say, well, China's saying they're not even meeting with us. Our president's saying they're meeting. So let it work out, folks. Okay, so like I said a couple weeks ago, relax. Okay, things will work out. If you're looking to buy that first house, try to qualify at 7%. If you qualify for that, rates hopefully are going to go down from there, and I don't see them spiking unless something really crazy happens, and that's not off the table as well. But, qualify at 7%. Then in the future, you always have the ability to refinance at a lower rate. And why I say that is, well, don't refinance if the rates go up. So you only have in the future that hopefully those payments to start to come down. Now, the insurances, taxes, those are another story. So before you go out there and really buy or start kicking the tires on a house, what you might want to do is reach out to your insurance agent and ask them, hey, if I were to bundle, and you got to make sure you tell them the bundle, if I bundled my auto in this house that I'm looking to buy, what would my premiums be? And just factor that in, because that could be a detrimental piece of your home affordability. Okay, so we have anybody out here? Let's see. If you guys got questions, please throw them up here. Thank you for providing the content and informative news. Thanks for joining me. So let's get over to my short term. I'm locking. So if you see dips in the market and so forth, but let me go this way for you. Here's the cool thing about me working with 33 lenders. Let's say you go out there and you start doing all your due diligence, and you did a fantastic job. You got out 5 quotes like you're supposed to and all this stuff, so you then end up locking at that best rate in the markets. What happens if rates go down? So if you got here, this is a 2-day chart. So the MBSs went from, 98.9 to 99.3. 50 basis point move. If we go to 5 days, I don't know what the 5-day did. It's huge. If you lock down here, you locked at 98.4. We're about 100 basis points off. So if you locked here with your lender back in, just a week ago, you might be able to get a 0.25% lower in rate. Okay, so this is where I come into play. You call your lender and you're like, hey, I know rates went down 0.25% or 0.3%. What can you do for me? And they're going to say, nothing. We can offer you a float down, but there's a fee. You can buy it down to today's rates, but there's a fee. Or let's say I locked you in. Well, we don't like doing this, but what I could do is go to the lender we locked you in at and say, you know what, rates have considerably dropped. Can you work with me? Can you give concessions? Maybe I'll give some concessions and we'll get what the client needs. If they come back and say, yeah, you're good to go. They come in and say no, I'll say, you know what, unfortunately, we're going to have to withdraw the application because I can get them a much better rate over at this bank. And then I'm just going to move you, place you with another bank. So not only can we help you out of the gate, but remember, if rates go down, you might be stuck with the current lender you're with. So we're locking in our people short term as they come in because I don't know what tomorrow's going to bring. When I start seeing charts like this, though, this is what's interesting. Today, I don't know what to do because we have a huge rally. Is this rally going to continue? That's the uncertainty we don't know. And again, that's where I come into play. Let's even say I miss it and it keeps rallying and rates drop and I locked you here and rates continue to drop before we close. I'm probably going to move you again because, that's what we're here for. I'm here to assist you not only initially, but throughout the entire process. So keep that in mind when you're looking to work with us or some other lenders, because I think that might be a key point in you choosing or why a lot of people are choosing us. So short term, like I said, I'm locking right now as they come in unless I see this moving. This is the dilemma I have today. I'm not sure what I'm going to do today. I'll text it out by the end of the day what I'm looking to do, unless this completely deteriorates. So that's why I'm looking at you very short term. Next week, going to be hugely volatile because, like I said, we're going to get all this data that the Federal Reserve wants. As long as this data comes in point, it's going to be completely up to the tariffs. But if any of these numbers start to really fall off a cliff, let's say initial jobless claims start really getting real bad, well, then the Federal Reserve's in a real pickle. Then they're like saying, well, we don't know what's going on with tariffs, but the unemployment, we can't afford for unemployment to really crash. So you're going to also start hearing about, now that they went from, recession to an inverted yield curve to now there's going to be stagflation. Folks, just let that go in and out your ear. You and me really don't see a lot of these things transpire. Yeah, our cost of goods and everything went up, but the media makes it so erratic out there that just relax. Even my anxiety is going out the roof these days. So a lot of the data that's coming in next week, as well as the tariffs, are going to determine my midterm goals. So honestly, I'm just taking this on a day-to-day basis, and that's how you should too. And if you're working with a stockbroker, that's how they should do it too. You can't review just just what history told us, and you really have to, you don't know what the future is going to bring. So long term out, I think a lot of the dust is going to settle. So, you might want to look to refinance now if you can get much better rate, 0.5% rate. Let's say if you can recoup your costs within 6 months and save money, good thing to do. But what happens if rates go up, 6 months from now, and then you took advantage of it? Let's assume they go down. Well, you already broke even, so it might behoove you to just refinance again. And same thing if you're out there and you bought your home, or you're looking to buy, get qualified at what you can afford. And if rates go down, then look to refinance at that time. So that's what my goal is for today. Let's do a conclusion. Let's see if mortgage rates got updated on here as yet. I don't think so. Nope. Stock market, what is it doing? Let's scroll back to the top. The Dow Jones down 225. Well, let's just say that could turn in a heartbeat. So just like yesterday or the day before, it went up 1,000, down 1,000, over 1,000. So let's just take this as blank. NASDAQ is there. We have the VIX. VIX is coming down nicely. This, what you have to look at is just when you go to CNBC, just look at this. All this is saying is if it's down, this is the blood pressure on Wall Street. So how anxious is it? This number, it should be around 10, 11, 12. When it hit 30 last week, that's when the Trump sneezes and the markets react. So that's what we're seeing, through there. So the VIX is okay right now. Let's look at cryptocurrency. It's still, it's 95. Let's look at this chart. This thing is crazy. We have this on, we talk about this on my Stock Talk channel because I do own Bitcoin, and we bought it back 6 months ago. Look at this. Let's see what the returns look like in 6 months. We bought it in September, and I think we've doubled our money almost on that since our trade. So that's what's going on there. Let's go over to oil. We also look at oil here, and I'll just give you the reasons why. Oil is in everything. Okay, so as oil prices go up and down, that's going to also help the inflation numbers. So we go over to oil. Let's see where oil is right now. Oil is down. It's $62 a barrel. That's fantastic. It was $58 a barrel the other day, but it's been around $70-something a barrel. So this is fantastic news for our inflation numbers as well. So that's it for that. We go over to the bond market. It is only up 12 ticks today, but I will still take the up charts. Federal Reserve, nothing. And that's it for today. So please check out my channel, therateupdate.com. That's my report for the morning, the opening bell. Did it live. Hope you found some interest in that. We got one question out here. Let's see if it's a question. And good morning, Dan. Can you talk more about the FHA Streamline Refinance? Thanks for the videos. I can. Let's just talk real quick about refinances in general. So most of the government programs, if you're looking at an FHA loan or a USDA loan or a VA loan, they have a program which is called Streamlines, and we can help you with those. They're pretty complicated, and they're not complicated in the underwrite. Here, the underwriting process, I can get you approved in a day or two. And here's what happens is, if you have one of those programs, all we have to do is pull your credit and make sure your credit scores are high enough to fit the program. And then you cannot have missed a mortgage payment in the last 6 months. You could miss one in the last 12 months, but hopefully that's not the case. So what happens is you reach out to me, and I'll say, okay, here's what we're going to do. You don't need a new appraisal. You don't need to prove your income. Okay, so but the problem arises on a lot of these is the loan amount is limited to this. We can pay off your current loan, and then you can finance. Most of these programs have what's called a financing fee. So you can finance that fee on top of it. That's about it. And sometimes you can do 30 days of interest. But the problem is now you also have to set up your escrow. Okay, so the unfortunate part is many times you have to bring your escrow money to the closing. Now that could be equal to maybe a mortgage payment or more. So can it be done? Yeah. If you have a mortgage payment or two set aside to do the transaction, it works perfectly because you'll pay that money at the closing. Then you're going to skip probably 2 payments to kind of equate everything out, and then you'll be good to go. So that's how the FHA programs work. You need to work with somebody who really knows what they're doing because of all these numbers in the background. And also, like I was just saying, if you lock in somewhere and by time you close, rates plummet, well, you're kind of locked in at that place. So that's what we can do for you. So again, thank you, Eric, for reaching out. All you need to do is go right through here, click the Apply Now button. It goes to a secure link, so it's going to click one time. Here, let's see it. It's going to click one time, and then it's going to a secure link. and then you're on your way. And these will come directly to me, folks. So if you fill this out, please expect a phone call, a text, or an email from me probably within 24 hours just asking, hey, what's your goal? What are you looking to do? I also want to show you this thing before you guys go. Here's what happens. Here's what's happening behind the scenes. You know how you used to get all those phone calls and then you sign up for the do not call list? Well, mine doesn't work worth a shit though, but I get calls every day. But here's what happens if you're looking for a mortgage or a car loan. When you apply with the bank or with me and we pull your credit, what's happening is the credit agencies are selling your data now to brokers, banks, lenders, and everybody else. Do you want your financial data sold? Okay, here's the other piece of this puzzle. As soon as I pull your credit report or any mortgage company or car company pulls your credit report, don't be surprised if you get between 30 and 50 solicitation calls. They don't know anything about you. All they know is we pulled a credit report and that's what's happening, so that's what we're seeing right through there. So that's it. Let's see, we do have another comment here. Go over through here. We have current mortgage servicer will send an escrow balance back after they've been paid off. So you have to pay attention to that too. What is look at your mortgage. Thanks a lot, Don. Appreciate that. Look at your mortgage statement. It's going to say right on your mortgage statement how much you have as a balance in your escrow. Okay, that should, a great comment, Dawn. That will get kicked back to you. So a lot of times that'll recoup a lot of that money that you had to bring to closing. But when you're if you have a VA loan, a USDA loan, or an FHA loan, your rate's above 7.5, please reach out to me today. I don't care if you call me, text me, email me, or whatever. Just let me know what your rate is. Let me know kind of what your balance is. Actually, you can do that right down through here. And these come directly to me as well. If you go to the RateWatch tool, you just click this. Here's what you can do. This is, and again, guys, I'm not selling this data. You already have your data sold, and I don't have your consent to sell this data, so I'm not allowed to do that anyways. So what you're going to do is go here. This is going to just go over a short little video of what I'm doing behind the scenes on this, but you just give me your information, your phone number, your address. If you don't want me to call you, just don't put in your phone number, put in a 555-5555, whatever, but I need to get a way to get you. And I want to know, what kind of loan do you have, what's your current balance, what's your home value, and what your credit score is, and so I can get back with you and say, okay, here's what the numbers look like. And I'll do a full analysis. I'll send you back an analysis. It's probably in a video form. I'm going to go over what the costs are with you and what we might be able to get you if you're looking to proceed with that. So these are just many of the tools that we have available to you. So please reach out to us. Make sure you subscribe. I'm trying to hit 50,000 subscribers. So if you can help me get there this year, we're hitting about 600-700 a month. So you guys are really pulling your weight on there. So thanks very much for that. But if you haven't subscribed yet, I'd really appreciate it if you'd done that, did that right over there. But if you guys don't have any more questions, if you do, please post it real quick. If not, I'm going to start my day and get working with my borrowers. So we'll give you a little bit of time for that. But again, we're looking for mortgage rates to come down a little bit today based on the markets. We go over to the markets. Let's see if there's anything going on there yet. Market movers. Let's go to the Dow Jones. It's probably still down a little bit, but I wouldn't be shocked. 220 now. We'll just say the markets are just straight there, and the MBSs are continuing to rally. They're still up 14 points, meaning mortgage rates are still going to decrease a little bit further today. So thanks for watching, guys. I hope you find value in my channels. If you like I said, if you haven't, please subscribe down below. But if you have a loan that you'd like me to review, reach out to us. I'd love to be able to help you. God bless. Have a fantastic afternoon. I'll be back here at the closing bell to let you know how this mess ends for the day, folks. So thanks again for watching. I greatly appreciate it. Stay tuned, and we do these